Okay, welcome back. Let's shift focus to what's happening in commodities. Manisha's here with what's going to be top of mind as we head into the tariffs day. Manisha, morning.
Well, that's exactly on top of the mind, the tariffs that is, and various asset classes clearly reacting to that. If you look at the Asian markets today, Prashant, we haven't seen much of volumes come in. The total focus clearly is on what kind of announcements we would be seeing. And in turn of that, we also are looking at weaker US data that has been coming in for the last 4 or 5 sessions, starting with weak US consumer survey data. The manufacturing numbers were on the weaker side. And then it also has been about the weakness in the jobs data that the markets are reacting to at this point in time. If you look at the Citi report, it says on US tariffs, that is, that the world, as we are going into that event right now, the best case scenario would be if we look at US tariffs between the tune of 5 to 10%. That is something that the markets or the world can live with. But the worst case scenario in their sense would be if the tariffs come in between 15 to 30%. That is when you will see that big knee-jerk reaction come into the markets as the US would be on there. There also is a report from Goldman Sachs saying that depending on what kind of tariffs we do see today, there is already a 35% of a probability building up of a recession in the US market. So that clearly is the narrative that we are going into the event with. In the meanwhile, when you look at the gold prices, well, we have seen record highs into this one. 10% of gains in the previous month and 19% of gains already in this year until now. It has been a string of all-time highs coming in for gold in sense of safe haven buying from tariffs, from geopolitical tensions, because the US dollar also has declined, and political unrest. All of that money seems to be coming in sense of gold. And most importantly, this is the reason that you have seen gold prices go up quite strongly in the previous week, is that the China gold ETF has added 233,000 ounces in the previous week itself. And China perhaps would be accumulating more going forward by their insurance firms. Supportive clearly. Take a look at the crude oil prices then, and we were trading at a 5-week highs yesterday, almost nudging that $75 a barrel mark. Now, markets are watching out for reciprocal tariffs. But in the meanwhile, it also is about the OPEC and allies meeting. That happens on 3rd of April, and an expectation that they could approve an output hike of 135,000 barrels per day from the month of May there. The US crude inventories also have surged slightly, and that also seems to be weighing onto the markets right now. But as I said, all of the data that has come in from US has been on the weaker side, from consumer survey to jobs data and to the manufacturing numbers. All of that has come in on weak. What the street will also want to watch out from here on is, one, of course, the tariff announcement. Then you have the OPEC and allies meeting. And then you have the US non-farm payroll data. Well, that comes in on Friday. So it promises to be a very, very eventful rest of this week.
All right. Thanks very much, Manisha, for that. It's absolutely eventful next 2 days, Thursday and Friday, after what we will hear later tonight.